Hello and welcome to my video. Today I'm going to talk about my top 3 stocks to watch for in May 2018. Remember, these are solely my opinions and not my advice to buy any of these stocks. Before I begin, I want to do a review of my top 3 picks from April 2018. First up is liquor store. The price of the stock did not move anywhere. My guess is that liquor stores need to be approved for dispensary before the stock takes off. At least this is what I think. Next stock is Hempco. 6 days after I posted the video, the stock took off, going almost 40% gains for anyone who bought into the stock. The last one is Village Farms. This stock declined from around $6 to almost $4.50 and has now recovered to a sub $5 levels. I think Village Farms is a good stock to buy at the right price. Now on to the main subject, my top 3 stocks to watch in May 2018. First company I'll talk about is Aurora Cannabis. If you're not aware, this is a company that I'm primarily invested into. I have an estimated 50% of my money in this stock. The reason why I picked the stock for May is because the stock may shoot up any time now. I could not find any information anywhere regarding their progress of merging with Cannabis, but I don't think the merge has been completed yet. Once it finishes, I believe the stocks could rise. After some research on why Aurora wanted Cannabis so much, I came to the conclusion that with Cannabis, they gained a big distribution channel and greatly increased their patient acquisition and a bigger portfolio of products. Clearly, Aurora did not acquire them on how much cannabis they can produce. Aurora already has 3 facilities. Aurora Sky, which will produce 100,000 kilograms per year, Aurora Nordic, which can produce 120,000 kilograms per year, and their newly announced Aurora Sun, which can produce 150,000 kilograms. The total from the 3 facilities produce up to 370,000 kilograms. I see the stock going back to the 14 and 15 and beyond. The way Aurora's business is structured, I cannot see anyone going wrong investing into this company for the long term. Next company I will talk about is Scott's Miracle-gro. I picked this company because I saw a huge decline in price from the peak of around $108. This company has a market cap of $4.7 billion US, which is about the same as Canopy right now. Scott's Miracle-gro Company is an American multinational corporation headquartered in Marysville, Ohio, where O.M. Scott began selling lawn seed in 1868. The company is considered an industry leader in the lawn and garden market with regional offices and research facilities across US and businesses in Canada, Europe, and Asia Pacific. In the US in January, Scotts reported a worse than expected first quarter loss, causing its share price to decline 40%. The CEO of the company, Jim Hagedorn, believes that the losses came from the changes in regulation in California, which affected one of its divisions, Hawthorne. Their Hawthorne division provides products to the marijuana industry. California is the biggest US state for marijuana sales, so delays in authorization and regulation for marijuana growers especially hurt Hawthorne's business. Scott's Miracle-gro stock pays dividends and has a PE ratio of 21, which is not bad. PE stands for price to earning ratio, which can also sometimes be called price multiple. Price earnings is a ratio for valuing a company that measures its current share price relative to its per share earnings. This basically means how much money an investor is expecting to put in to see a dollar return from the company they are investing into. A stock with lower PE is always better investment than a stock with higher one. Aurora's price to earning ratio is very high because they are not making enough profits and sits somewhere in the 700 range. Last stock on my list is General Electric. Founded by Thomas Edison 125 years ago, General Electric is an American corporation in New York and headquartered in Boston, Massachusetts. As of 2018, the company operates through the following segments: aviation, healthcare, power, renewable energy, digital, additive manufacturing, venture capital and finance, lighting, transportation, and oil and gas. From an all-time high somewhere in the range of $30 in April of 2017, GE stocks have steadily declined. As of right now, April of 2018, the stock is sitting at around $14. GE's troubles come from a slowing global energy market in an increasingly competitive market. The CEO of GE has also made a few unfavorable purchases, spending respectively $10.1 billion to buy Alstom and $7.4 billion to buy Baker Hughes. Alstom is a French company which sells power generation kits. Baker Hughes is an American oilfield services group. Both companies are not reported to be doing well. Investors were expecting a bad report on April 20th, 2018, but GE beat expectations and the stock shot up 5% for the day. For me personally, I'm hoping GE drops back down to $13 so I can buy in. I'm pretty confident that GE won't go bankrupt because I think they're too big of a company. GE also generates around $26 billion per quarter. Thanks for watching. This is an exclusive video just for my Facebook group. Please subscribe for future updates. If you like this video, please give me a thumbs up. If you dislike this video, please give me a thumbs down and have a great day.